Hey, today is January 24th, 2026. I'm here with three traders at breathingwiththemarkets.com. We were in a group session.
Just imagine for a second if none of us had met Rich, where we'd be in the journey we're in. Right. I would just be gambling constantly. I have a problem with gambling. I mean, Nick, you can edit this out, Rich, but I've got a personal message for Nick Sean. And I'd like to say, fuck you, because what you created over the course of 2 years, not only to myself, but thousands of other traders, has left issues with thinking like a gambler that I have had to battle, and you've had to battle for close to a year now, because just by the bounce, it's caused problems. And it won't just be me that's affected by those types of gurus and influencers, because they're all doing it. And this whole market and whole industry is just filled with fakes and sell you the dream and everything. And I just wish people like that got caught and got removed from this entire, business. They should not be allowed to share the information they do, because it's giving a false pretense to normal people like me, where you join a trading group thinking, well, I'll just take their trades, Nah, it doesn't work. It's wrong. It shouldn't be allowed. And that not just goes for him, that goes for absolutely every single one of them. The people that are on these podcasts, it's all fake. It shouldn't, it's wrong. It causes problems, man, for people. You're seeing them in their Porsches and their Lamborghinis, and you think, follow my trades and you'll be a millionaire. The amount of money I spent following idiots like that, throwing thousands of dollars weekly down the bin, following their signals, is one of the reasons I'm in the position I'm in financially. So yeah, you can edit that out if you want, Rich.
What are you talking about, bro? All you need it's just 50-50. All you need is a 1-to-1.
It's damaging, Will. It's damaging.
I know. It messed with me too. The whole flip a coin thing and 50-50. It's just 50-50. It's like it does mess with you, because he puts the emphasis on like just the risk management part, and how he's like basically all strategies are it doesn't matter. Price is going to just go do whatever it wants to do. And so just look for kind of a zone and just basically flip a coin 50-50 and just focus on risk management. It messed me up too. I mean, I was in that group. That's I
followed that idiot also, trade by trade for 4 months and lost 11 grand of my money.
Hey, at least, bro, time is passing regardless. At least you're on the right path and you're doing the right things. And before you know it, it's going to be another year down the line.
Yeah.
And you might be in a completely different situation at that time. Yeah. And you'll look back and be like, wow, man, I really made it through that.
I think also that Nick Sean kind of creates, if you listen to him a lot, it creates this belief that it really is just all subjectivity and intuition, and that there's no strategy that really works. Just kind of flip a coin. When in reality, like we know through experience, like there is a strategy that can work, and
it's not even
there's a framework.
The market. It's how the market moves.
Yeah, it has a particular language that can be learned. And I would echo Sire and also say to you that like it will get better. Like I know you're on the right path, and it's gonna get better. It sucks when you're in the moment.
Man, Martin has a heart. He went through some bad times. Now remember, everyone is presumed innocent until proven guilty, right? But in the trading industry, it's very difficult to go after these fake gurus. And not one person in general. Those are some pretty powerful words. And yes, lives can be destroyed based on the information that you give people. And he has his own opinion, and he has a voice in the matter. And he has witnessed what is good and what is bad. Go ahead and check this out yourself. do your own due diligence, do your own investigation. Okay? Take a moment and pause if you want to read some of this information. And remember, no one is guilty of anything until proven by the court of law. And remember, everyone is innocent until proven guilty. Check this out.
Nick Sean and FaKe fraud. US 3 reviews. June 20th, 2025. Nick Sean is a liar and FaKe. Nick Sean is a liar, a scammer, and 100% fraud. Tried to blame his year-long losing streak on regulated broker, only to start a new losing streak with unregulated broker. This guy has the worst entries. Even when he rarely, luckily, gets a good entry, he's a constant round tripper. He's the Jim Cramer of Forex signals and trading. When the bragging hits a crescendo, all his trades are about to become losses. I wish this fraud was arrested and put out of business for scamming so many people and causing naive, gullible people to fall for his garbage. His videos are endless streams of twitches, nervous ticks, BS, and word salads. Classic charlatan. Don't give this fraud a dime. By far, one of the worst FX scammers ever. No track record. Just his nonsense claims. No auditable proof of profit. It seems most of his income is from scamming gullible subscribers. Report this fraud. Oh, and if you make a truthful comment, negative, on his videos, he blocks you. Cultist tactic. Ask GuRu about Nick Sean. It's hysterical and scathing. Even Grok knows this fraud is a scammer. June 18th, 2024. I know a fraud when I see one in Forex. I know a fraud when I see one in Forex trading. I've been tracking this guy's trades for months. Here's what he does. 1. Has multiple accounts opened at the same time. Makes it impossible to know which account is profitable or not. 2. Makes ridiculous claims like 90% winning trades over the last 6 weeks without any auditable data. 3. Forgets to post results for losing trades while taking victory parades for a single winning trade, usually from a previously unshared account. 4. Gambles like he's in Vegas. With subscribers' money. 5. Waits for weeks to enter a trade and maybe gets 30 pips. Misses 200 point up move to catch a slop exhaustion trade down for 20 pips. 6. Repeatedly tells you are going to lose. The only truthful thing he says. I've challenged this fraud to a trading contest numerous times, but of course he ignores my requests. Don't give this fraud a dime. We're trying to get him shut down for good. He has no verifiable trading data on the internet. Total.
You decide. Do your homework. You know how many people follow fake gurus in general? There are so many fake gurus on YouTube. Do you understand how hard it is to actually get clients who want to follow real traders? Someone with a real strategy, a real edge in the market? Very, very difficult. I am here to tell you, very difficult. I am changing one life at a time. And I don't have thousands and thousands of traders knocking at the door. Why? Because I'm not a fraud. That's why. It's pretty simple. I'm not going to tell you something that's going to make you feel good. I'm not going to pretend that I know how to trade. Go back in my history. Look at my trades. And Nick Sean said, I didn't know how to trade. I was even kicked out of his Discord. Yes, that's right. I was kicked out of his Discord after numerous traders said I should have my own channel inside his Discord to teach them how to trade. And he didn't like that. It's for you to decide. Again, everyone is innocent until proven guilty, right? But do your own homework. Don't be fooled by all the fakes out there. Okay? Be careful. Save your money. And search for a skill. If you cannot trade objectively in the market, it simply doesn't exist.
Oh, shit. Here we go again.
And they were giving up some sauce, and we were talking about some bad days and what we do and all that stuff. And I'm like, God, it would be great if we could just continue this video and maybe, continue talking in general, and it's genuine communication, but we'll just keep going on. And I'll start off basically saying that, I was just discussing about the fact that I had two funded accounts. I was taking payouts throughout the entire week. Had another payout. I had already put in for a payout come Friday. Thursday, I made a video saying that TPT was lightning fast. I woke up Friday morning, assuming that the payouts would have already been approved, and I was able to trade on Friday. I was a little ticked off. I wasn't able to trade the open because they didn't take out those profits. I had the other accounts that I was going to trade also, and I had 2 sacrificial lambs that day. And the payouts that I put in for, I didn't get those payouts, and I blew those accounts up, so they went back to 0. I already had profit in those accounts, so the profit that I did make in those accounts went to 0, and I didn't receive the last 2 payouts. Mind you, I did not put in for those payouts, so I did not make a video on those payouts yet. We're just discussing some shitty days and things that traders do. And Will, who's been with Breathing with the Markets for a while, well, I wouldn't call it funny, but go ahead and tell about your big day, Will, about your big run.
Sure. I was telling a story. Actually, this happened to me. This was like right after Trump had gotten inaugurated. I was in a trade. I was in a gold trade. And this was like right when he starts talking about like doing tariffs for the first time. And gold, it just exploded. And I happened to be in a trade like pretty high leverage and with a pretty tight stop loss. And it just went and never really stopped. And I, in a very short amount of time, I made over $20,000. And you would think that like, you're like, that's an incredible win. I'm going to withdraw. I'm going to put this like into my checking account. And you're already like thinking about all the ways in which you're going to spend it. No, like, I'm like, I want $20,000 could be $40,000. You know what I mean? It's just so hard, like as traders, to kind of fight that impulse. Like it's so ingrained, I think, in us. Like I remember I was listening to the Joe Rogan Experience, and he was talking about how he knows a guy, or through somebody, I think it was through his buddy Brian. His buddy Brian knows a guy that has, I want to say it was like $5 billion. He's a billionaire, but he knows a guy who has 15 billion, so he feels poor. And it's like this constant like comparison that we do, and also like this impulse to just want more and more and more. Like I've experienced it in trading. I've experienced it in my career. Like you think to yourself, like when I get to this level, like I'm gonna be happy. I'm gonna be content, and then eventually it gets normalized, and then you're like, well, that's great, but this would be even better. And that is very, very risky when it comes to trading, because it's so easy just to like click a button and increase your leverage. All of a sudden you're like trading, say, 1 mini, and you're like, what about 3 minis, and then it'll be the same. I only need it to happen once, and those are the trades that always, they burn us. And so I, over a series of trades, gave back almost all of the money. It's just human nature to like, to run it up and then blow it up. And so we need to learn how to like actually take profits, and how to it's weird because we were just talking about this before we even hit record, about how like it's our trading attracts like a certain, I think, type of individual. Usually you have to be pretty risk taking. People trading, as much as we like to have this debate, like, is trading gambling? Is it a skill? It's definitely a skill, but you're still risking money to make money. And it just depends on how you want to define a gamble, I suppose. Like, being in a marriage and expecting that to last is you taking a gamble. That's like 50-50 based on the statistics. Starting a business, I think only 20% of businesses really make it. And so like you're taking a gamble if you're starting a business. Trading is a risk, and it takes a certain temperament to do it. But I do think I think it's hard, because I think most of the people in the industry put the emphasis on the psychology, and that is a part of it for sure, because we get blinded by the reward, or the prize, you could say. But that's because it literally ties back to our survivability. Like money opens doors. It gives access to resources, and like without it, we could literally be at risk, our survivability. And so anything tied to that, it's going to get hijacked by the nervous system. We're going to like our fight or flight, all that stuff kicks on. And that's when we make our poorest decisions. So it's crazy. Like, yes, psychology is such a huge part of trading, but the skill is important. Like having an actual framework, which is what you teach, Rich. When you can get both, that's when like when you can learn to actually like just take the profit, like we were saying, and like on Friday, for example, I was up over 2K on an account, and I was telling Sean, like, dude, I did that during the London session. I was trading NASDAQ, ran it up during London. I was eligible for a 2K payout. And he said, I was like, dude, I really want to wake up in the morning and hit NASDAQ. Maybe I can get 4, And he said, bro, please just withdraw it. Like, he's like, like the whole bird in the hand, thing. Like, you have it. Like, just take it. That was so hard for me. It was so hard for me. Like when the morning came, I had to like just watch the candles go. And
how come you didn't call me? Because they pissed me off. They didn't clear my account before. So
you didn't clear the account.
Did they clear your account before the morning trade or not?
No, so I had to just wait the entire day, and I didn't trade on it. But you know what? I will say that it did feel good actually locking that in. But I had to like really, really fight the urge to not want to try and make more,
Yeah. Yes. Yeah. So we go back to psychology, and I say the risk starts before the execution of a trade. So when you drive, and I'm not a big psychology person when it comes to trading, because I always revert back to skills such as sports and things that actually take a skill. If you have to perform and you're getting paid as a professional athlete, I don't believe it's some psychological issue. They practice, they train. Those who don't train hard in the off season, you can see it. And there's someone out there that's going to train harder than you, and they're going to take your spot, right? You're not guaranteed. Now, you might have a signing bonus and you might be guaranteed, but those people eventually are not going to be, they're not going to last 11 or 12 seasons in the NFL or 8 seasons in the NFL. They're going to be on the sidelines, or maybe ball players or hockey. I don't know what the average hockey player, does anyone even know how long the average hockey player lasts? Like getting in fights every day on the ice?
I don't know. But I know for most physical sports, like by the time you get to like 30, between 30, 35, like the wheels start falling off.
Yeah. So we get into this skill. So a skill releases a lot of that psychological, should I get in? Should I get out? Hesitation and stop losses. Do you use a stop loss now, Will?
Never.
Okay. What about you, Sire?
I do not. No.
Now, you made a comment, Sire, moments ago prior to us asking if you guys want to go ahead and do a little YouTube clip, but because you guys are really throwing out a lot of sauce, but you had made a comment. So you came from not trading at all to now taking payouts, and you made a question like, I don't even give a darn now about it. So go ahead and explain and why the mentality. It's not cockiness. And it's not.
It's the psychology behind it is like, well, I ran up my express count to $6,000. In 3 days, I needed 2 more winning days to get a payout. But I wanted to do something that I never did before, and that's get to 10K and take a max payout. And I had just traded that morning session, made good profits. I come in after work, I turn on the charts, I see a setup for silver, which is like, if it moves a tick, it's a lot of leverage. I go in 5 minis, and as soon as I enter the trade, the spread is $1,300 down immediately. And then 10 seconds later, I'm wiped out. But I wasn't even mad at it, because the fact that I know that I could come up in the morning and do it again, I know I'll get to that point again. It's not a big deal. I didn't gamble my way to those profits. So, and I've lost so many times, and I've had that feeling in the beginning where like, oh my God, all those days, all that progress I just lost. But I'm at the point now where it's like, I'm just taking the trades that I see, and I know that my skill is getting better, and I could just build right back up to that $6,000 balance. It doesn't seem like a lot to me anymore. Before when I was just taking $200 days, I just want 200, and I'm a week in, it's so much pressure. And then you just see that drawdown, you just see your account get blown, and it would ruin my day. And then not anymore, man. It's like, I'm numb to this stuff now.
I think that's awesome. I think you're taking like a conscious risk. Like you like Rich says, the risk starts before the trade. Like you looked at it and you're like, this is actually a risk I'm okay with. I may lose the entire account, but that's fine. Like I'll just run it up again. And if it hits, like it hits. It's right. So
it was still a dumb decision, but I was trying to push my limits, and I was trying to do something like kind of heroic, and I thought I had a good chance of doing it. And I just had the silver was the wrong thing to be doing that type of stuff with. But
so when we talk, and we want to make sure that, are you trading the same? So you're trading the same, you're not YOLOing, like all you're doing is you're adding leverage. So your leverage that you haven't been using before, right?
Yeah, because I don't look at the leverage as a gamble per se, or a YOLO, when I'm fully risking what they're giving me to work with, because I'm taking advantage of that. I'm on my Lucid account, and it's a $1,000 drawdown, and I'm still going 10 micros in that. It's not I'm going to use what they give me. And if you're in the right spots, the drawdown isn't a factor, really. It shouldn't be. If you're taking really good trades, you could build that buffer very quickly. So it's exciting, trying to use more leverage and just try to be more precise. But, if it goes against you, that's the risk you're taking as well. I mean, the market does do crazy stuff, but I'm not going to be down on myself and just like, I don't have a skill because of that. You know what I'm saying?
So, no. With the leverage and the risk. The leverage and the risk has to be the same. That's the bottom line. So the higher the leverage, the more precise. And the more precise meaning that we know exactly. You have to have the confluence. You have to have the objective approach to the market. And then you leverage, and you're like, okay, what is my drawdown? Is it a trailing drawdown? How much do I have in the drawdown? And you understand the pump of the market, right? So when you leverage high, just a small pullback could wipe that account out, but it doesn't mean you don't know how to trade, because you had the direction right. It's when you jump in, assuming that you saw a pump to the north side or south side, and you just jump in because you think buyers or sellers are just changed market direction, right?
Yeah. I said this earlier, but like also the candles feel so manipulated. Like I've learned to not even trust the prices or visually what I'm seeing. You always say like, don't believe, like, what is it? Anything you see or half of what you see.
What you see, nothing you hear.
You get deceived by your senses. And for sure that program is manipulated. And like the candles, like I'll be in a trade and visually it looks like it's barely going like a few ticks behind, like against me. And the price that I'm getting shown, like how down it is, feels like like way higher than what visually is being shown. And then when it goes into profit, it feels like sometimes it's got to go like double the distance just to get the same, in drawdown. It's crazy. So like if you're in heavy, like yes, like the slightest little pullback will blow the account. I've experienced that. I know that. At the same time, like if you're in like say trading NASDAQ with one mini, dude, like one or two candles could get you like $200 to $500 like that. It's pretty crazy. It feels like a money glitch, like this shouldn't be allowed.
Well, when you have a skill, or if you're trading objectively, correct me if I'm wrong, but if you are actually trading objectively in the market consistently, right? So you said silver, you trade in NASDAQ or gold. Martin's typically NASDAQ. I'm typically NASDAQ, or I'm looking at Dow, but I don't remember the last time I took something on the Dow 30. So all of this, are you seeing all of the same methodology, objective evidence in the market to take the trades?
I'll say that on certain tickers like silver, at least with the take profit and Tradeovate, I can't remember where they actually get their data. Are they getting it? I think they get it from like CME Group, but with silver, I've noticed the charts just have a lot less information, and so like there's all these weird gaps between the candles. And
that's they blame it on liquidity, right? But I mean, when I see a chart like that, it looks like it's overnight, right? I wouldn't trade. I mean, personally, I wouldn't trade on a chart like that.
The cost per tick is way higher too. So it's
a gap in price everywhere. It's gapping everywhere, right?
I find NASDAQ has like the cleanest charts and the biggest moves, and like all the time, and it usually around New York. But dude, I've seen some real insane moves during Asian session, London. Like it literally, whenever it wants to like bust, it will, and it's like 500 to 1,000 ticks like in 15 minutes. It's crazy.
7, 8, 9 candles in a row.
Yeah.
To the upside or downside. Yeah.
Yeah, and to me, there's like almost no better chart. The only thing that comes close, I think, is gold in terms of opportunities with the volatility. And as much as Trump has made some stuff difficult, like I was in it's also opportunity. Last week, I want to say it was Thursday, he said he was ending the tariffs with EU, and he was going to, he was putting forth his plan to purchase Greenland. And if you noticed on the Sunday open, there was a massive gap down. It fell like 1,200 ticks. And from Monday all the way to Thursday, we were just slowly inching back into that gap, but it hadn't been filled. And then when he announced that, I saw price immediately go from the south side to the north, meaning like above all the moving averages and stuff. I saw price just starting to like take off, and I jumped in and rode this like it entirely filled that gap from Sunday, and I made huge profit during that time. Like as crazy as some of the stuff he says, if you're on the right side of it, it can be pretty awesome. But it's like it's tough. What I'm trying to say is that like NASDAQ chart, I feel like gives the best. If you think of the waves, the candles patterns as waves, like dude, it's like surfing. They're just like constant maverick waves, and Mavericks. And that's where you want to be, because it gives you like the highest opportunity for gains.
Yeah, or losses, right? If you're not on the right side of the market and you're not trading. So if you go back to the day that you were talking about and that dip down, you will know, if you really looked at it without giving any information, but you will know why that dumped down, and it gave indications of what direction that was going to go to.
Totally. Anyway. I saw on Friday, actually, I was in a trade on Friday expecting that it was going to be going down, and it just consolidated until the end of the day. So when the market opened on Sunday, I was like, there was that move that was supposed to happen on Friday. It happens. So that's another way that it's just so manipulated, that like there's a group of market participants that can do stuff when everyone else is locked out. That's crazy. I think I read that NASDAQ was going to open up, though, to be 24/7.
Yeah, and it won't change. The algorithm will not change, right? It won't change. If you can see stuff going back in history, and if you can see and identify it going back in history, you have to understand, and if not, you got to get out of trading. But you have to understand it's not buyers and sellers that are printing these candles. It's not. If there wasn't something actually moving the market, an algorithm, and we had 14 million people take the day off, that market would still move. Yeah. Right? Because all of these people that talk about liquidity during the holidays, no liquidity. If you didn't trade during the past holidays, which I did, I mean, there was beautiful moves. There were waterfalls, glaciers, it was everything. I mean, it was just so beautiful. right? And then you have 99% of the people say that are not profitable, that it's low liquidity and don't trade during that time. Nobody's really posting during that time either. And you have these beautiful moves in the market, right? The market is going to give you things when you least expect it. You just have to trade it appropriately.
I experienced a little bit of both. I feel like there were some days where, like, at least on NASDAQ, New York Open, where it wouldn't break out of the 15-minute range, and it would just range for almost the entire day. And it would be like a huge impulse candle up and then down and then up and then down. Like,
and they get smaller.
Just getting wrecked, like just getting chopped up in that type of, it's like a seek and destroy algorithms running. It's crazy. I
hate that. It gets to the point where you, without going into details, it gives you the source of entry.
Yes.
And then reverses, and you're like, you bitch.
Yes.
And I don't know about you guys, but I sometimes get caught in that. And I think you asshole, excuse my language.
Well, you got caught in the contraction phase.
Yes. But it's hard. What you just said, though, is it's hard to recognize sometimes, like in the moment, because if you're in a contraction phase, it is just ranging, going sideways, and you think, oh, it's about to break to the up, and then it just immediately goes to the bottom of the range, and then you're like, oh, it's going down, and then it flips back, and you're just like, you're getting wrecked on each side. And
you zoom out.
But I don't tell you to trade that way.
No, but you just, I assure you that, like, it's giving me green signs, but the problem is I haven't recognized yet, like the zoom out that Martin was saying, like that we are still in a contraction right now, and that I'm jumping in too early, and I'm not allowing, like,
I've done that. We've all done it, right? Because we think that this is the time, right? But still, if we're in a contraction phase in the market, you got to stay out. You got to stay out. It's you have to trade in the expansion phase.
The boats are being loaded still.
Correct. It's being shoved in the bottle, and then when the bottle opens, it'll spurt, right?
Yes.
Like I was saying earlier, the expansion phase on Friday, I can see, because you've taught me where the market is going with a high probability, and I get excited by that because it's very clear. What I don't know, because I'm still working on that skill, I do know, it's very manipulative, and it can trick you, and it can pull back, and then it can go and pull back, and you're left like a hormonal teenager wondering what is going on. And then it goes. And I was saying for everyone watching earlier that I was very close to my first payout on Friday, and I got a bit excited and I over leveraged. I wasn't patient, and one candle, because of trailing drawdown, knocked me out of my account. And then the very next candle after, boom, to the sky. And I sat there and I closed my laptop and I threw it across the room. I didn't damage it, threw it onto the bed, and I thought, fuck you. But we learn. We learn, and it's because we have been taught how to see the market, how to read it, the algorithm, the training. It's been ingrained into us. We can't see it any other way, and it's a blessing to be able to see these things and look back at the end of the day, and it's so objective. Oh, look, price did this because of that. Price went there because of this. So it's a nice feeling to have, but the control and the discipline that comes, I think, with time and practice.
So I'll share some personal experience that I feel like when you get really, really good at it, like you want executing when you're on like an active candle, like executing intra-bar is the best way to get the best price. But the way to get the least faked out is to wait until the candle closures to make your decision. And so I found that when price is about to break out, I want to enter because I want the best price. But if I actually wait for the candle to close first, it will, a lot of times, like it'll spike up like it's going to go and then immediately pull back and then close. So you get faked out a lot less, because even if the candle closes beyond where we wanted it to, it's at least indicating, I think, it's wanting to go in that direction. And then what I'll usually do, and this is a little bit of like discretion here, if it's going the direction I want, if the candle was like really large, and this is where it's subjective, and I think it's a little overextended. And we're talking about 1 minute candles here. I'll usually will wait for like
it could be an 80-point candle.
Yes, it can. And I'll wait usually for the next candle to start pulling back. And then when it shows the indication like that it's going to keep going, then I'll go, because I've now had the candle closing prove to me that we are going at least in the right direction. Where you get faked out a lot is when you're entering on the active candle and you're like, it's going to go, and you enter. But waiting for candle closures at least helped me for a while.
No, absolutely. Waiting for a candle closure, because we could be looking for a gem in the market, and it's a gem for 30 seconds, and then it's not a gem for 5 seconds, and then it's a gem for 30 seconds, and then all of a sudden it's a candle that we don't want.
So the logic there is like, you always talk about studying the still charts, but when we go back and look at the still charts, like it's usually very obvious why price did what it did. But like where you get faked out on is when the markets are live and you see the candle pumping, that's what freaks you out. But if you just wait for the candles to close, you're looking at the still charts. Like
correct,
literally just
correct. That's why I say if you don't see it, it doesn't exist.
Yes.
If you don't see it, it doesn't exist.
It's almost like if you make your decision based off only candle closures and kind of ignore a little bit, you can't ignore it, but a little bit of what the active candle is doing, or at least like weight it less in terms of your judgment, because anything could happen within a 60-second time frame. You know,
that's a long time, isn't it? When you're looking
at
it,
it's a very long time, especially when you're in drawdown or holding.
Yes.
If I had entered more of a reasonable leverage, then I could have endured the single candle pullback. But that single candle pullback was 200 ticks, and it hurt very quickly. And I thought I had a problem with my internet connection because it all just went ping off my screen. And then the next candle went, and I thought that was really stupid. You know, all that work, and then 20 seconds of being an idiot. And but see, I've said before, you learn from your mistakes, because had that had shot up, I'd have felt like a hero because it was a big leverage for a small account, and I would have had a great day. But at some point I would have been bitten, and today was the day I got bitten, or that day. And all that teaches me is patience and leverage. And it's something that Rich has always said. He only ever loses with leverage. He'll always have the direction right. And I agree. I knew where it was going. I had the direction right, but one candle knocked me out because I did something silly. And you learn from that.
When we're trading on prop firm and we have a trailing drawdown, right? When we have a trailing, nobody really talks about this. You have a trailing drawdown right up your ass, right? It's always following you. You go up, it goes up, and then it flexes, and then they have unrealized gains. If they're counting unrealized gains and you have a flex to the upside and you're not able to take that out when the candle's flexing, and you have candles that are actually not quick enough to print the price. So you may get a fill, or they may blow your account and you might not even see the candle down there. You really won't even see the candle down there. There is so much manipulation in that candle and slippage inside the candle. So if you are approaching the market in an objective way and you're actually putting everything together, the only way that you can really, really screw this up is over leveraging, right? If it's two things. If you have this trailing drawdown going up and you size in a lot, the bigger size that you have, the higher risk it's going to be. And it's not risk and reward as what we talk about in your own live personal account. That's obvious risk and reward. But there's no limit on the upside and there's no limit on the downside. It's equal, right? So it is actually equal. When you get to prop firms and you have different rules, it's no longer equal. It's limit your upside because they have a consistency rule. So they limit your upside and they don't limit a downside, right? Some of them have a soft breach, which is good, right? It's a soft breach. That's pretty good. That's limiting a downside to trade for another day, right? But when you have them calculate unrealized gains in a fast market and you're in there heavy and you're a scalper, which you compound, scalpers compound, right? It's about taking this account and compounding it and getting into the market and out of the market. We're not talking 10 ticks. We're not talking 5 ticks. We're not talking hyper scalping. It's actually, we're waiting, we're collecting information, we're finding the highs and lows in the market and where the weak hand is, and we get in. At that point, it's about leverage and keeping it consistent. So that's where that learning and collecting the own data, because we talk about data all the time, and we talked about it in the group session today. If you're not experiencing it, because Will said some great things, Martin says some great things, and Sire, because they're all seeing the market differently based on their leverage. They're not seeing the market differently based because of the movements of the market, because there is a way to trade the market objectively, and it's a skill. You have to have a skill in the market. Yes, your psychology can be affected by if you throw 15 minis on there. And if you haven't traded with 15 minis, then you're going to realize really quickly that you even have to hone in your skill to know exactly where you're at with the highest probability, because you have the 15 minis and you have a trailing drawdown of $4,500 that is going to flex with you. And that move is going to happen pretty hard. It's going to happen pretty fast. And a lot of times you're not able to collect or get out of the market. But Sire, he made me laugh. Sire's like, man, I don't even care anymore. Because I'm assuming because you have a skill now, right? So how long ago did you start with me, Sire?
I want to say it's like 5 or 6 months ago.
So 5 or 6 months ago.
I don't know the exact date at this point, but it hasn't even been a year though.
But so 5 or 6 months ago, and how you felt then to taking your first payout within a month or so, and now, I mean,
wow, it's completely different. It's crazy, honestly, because I used to be so worried about passing these accounts and I was just overthinking so many things. And now I could just go in there and I'm confident that I'm going to pass these accounts and at least have a shot for a payout. And if I slowed it down, I know I could actually just get smaller payouts. But I'm not even trying to do that. I'm just trying to keep on going and get better at my skill, more leverage, and just let it play out. But I'm in a completely different point that I used to be when it comes to looking at the chart and the speed of the candles and everything like that. Like, I'm really getting in tune with that. And that is actually a skill, reading the market structure and just knowing when to get in. That's experience. Of course, it takes a lot of experience, but it's experience of doing the right things over and over. It's not experience of just logging in and looking at the charts with no idea what's going on. So I think once you have that knowledge, then you could really refine your skill. And all that time that I've been putting in is paying off.
So when we talk about market structure, I want to make sure so that the viewers, I don't teach you breakup structure and market structure. And
that's not what I'm talking. That's not really what I'm talking about. I'm talking about more just like the patterns that I'm seeing, and
how the market flows.
I'm looking at them as like clumps of the price action. What's going on in those clusters of price action? That's the way I'm looking at it. And of course, like, there's other things that are getting me more interested in what I'm seeing, and then things add up, and I'm like, this is a go. I'm very confident in what I'm doing right now, and I let it play out. But that's the skill right there.
So we hit on, and it's interesting because Will talks about the psychology aspect of it. And my input on the psychology aspect of it, and everyone has their own opinion and voice, is that I look at it and I relate it to life skills. I don't know the last time I got into a car where I had some psychological problem of driving a car, right? Well, now if I get in the car or I get into a Lamborghini and I hit it pretty hard and it starts to tail and get wiggly on me, I think your psychology and stuff like that you're probably like, okay, I'm in something with a whole lot of power. I need to kind of tone this down. That's a psychological. That's a reminder. Like, hey, you're over leveraged, right? So I feel that it's related to leverage, right? First, it's gambling. Does anyone disagree with this? It's easy to gamble. There is no psychology on gambling.
I think that you could gamble two ways. You could gamble with not knowing where you're at and not knowing what trades to take. That's for sure a gamble. But even if you do have that knowledge, you could also gamble with your sizing. And that's a whole nother thing, but it is kind of gambling in a way.
It's taking a calculated risk. Like, it's you're accepting the consequences, but it's not like you're doing it like flipping a coin. Like, you're still operating within the same strategy. You're just increasing the sizing, knowing that this could be catastrophic, but that's a risk you're willing to take because you can just restart an account and grow it back up. Like,
now, calculated risk, what separates risk takers or separates successful, or I don't want to say money is successful because it's not, but people that have a high risk tolerant and are successful at it, they take calculated, and the key word is calculated risks, right? And then you have people that are not willing to take a risk, but they don't understand that you can take a calculated risk with a higher probability and become successful at that.
You have to. You don't think
everything's a risk. Buying a house is a risk.
Yeah.
Getting married is a risk. Starting a business is a risk. Like, anybody that's like become anybody has had to take risks to get to where they were.
Anything.
I wanted to speak though a little bit to the psychology. You used the analogy of driving a car, and I actually think that's a great one because, like, I think, yes, leverage does create a different degree of, or let's just say, affects our psychology. Okay, I mean, when you see the candles kicking, and it's different when it's like, in the dollars, single digit versus like, 3 digits or 4 digits. Like, it's crazy. But okay, when you first learn to drive a car, you're I don't know if you remember your experience, but I remember, like, if I'm reversing out of my driveway, I'm sitting there and I'm checking like the mirrors like multiple times. Like, I'm doing all kinds of stuff to make sure I got my seatbelt on. Like, is my seat well adjusted? All these different things that are going through my mind at once just to perform this action, right? Once just a couple of weeks ago on the 3rd, I turned 40. I've been now driving for a lot of years. Now it's to the point where when I drive, it's so much of it's automated. I don't even think about it. If I'm reversing out of my driveway in the morning, while I'm reversing, I might have a thought like, oh crap, I just forgot that thing. I need to go back into the house and grab it before I leave. Like, our brains are kitted to take things and to automate them in a way, like push it into background processes. And so that we can use our, you can say, brain power for other things. A lot of it has to do with just exposure and familiarity. Like people talk about, you see funny meme videos about people trading on like the 1 minute time frame, and they liken it to like storming the beaches of Normandy or something. And they're just like, oh shit, like what's going on? Like you get these fucking flashbang candles and you're like, and it's ringing in your ear and shit. Like it's crazy. But like, we've been doing this for a while now. And with your framework, because I have such a ability now to look at the charts and just know which way the charts are going, I've become so familiar with trading on the 1 minute time frame that like it sometimes feels like a snail's pace, like watching like a paint dry or something, like, or the grass grow. I'm sitting there looking at it like, come on, like just candle, you need to close. Like 60 seconds feels like an eternity at that point. Like what I'm trying to say is that like the more you experience it, the more familiar it is, and also the more the less you the more your brain could then be used for, you could say, other tasks. Well,
the less you think about it, because if it's sight and it's learned behavior, when you see something, you don't have to ask yourself, am I believing what I'm seeing? I mean, it's right in front of us, right? So if you have that experience, that's why I talk about volume and hit rate. If you're going to take one trade a day, think about this logically. If you're going to take one trade a day, and I don't encourage any traders to take hundreds and hundreds of trades a day or executions a day, but if you're going to take one trade a day or one trade a week, what experience, just ask, what experience would you have? Seriously, how much experience are you going to gain taking one trade a week? Not much. If you think that you're going to go to a baseball park and you're going to basically hit one swing at a ball and call it a day, like they take thousands and thousands of swings, right? They're always constantly working. In trading, instead of taking thousands and thousands of swings on a demo where you are oversizing and using leverage, which has no psychological effect, but it has a negative effect on your trading, because when you get into a live market or into a funded or a test account, that is going to roll in. Some people may or may not agree, but that's a switch that it's going to be hard to turn off. So when we get into a test account, we may increase our leverage, understanding that the risk is that we could possibly blow that account, right? But we're not talking YOLO, and depending on who you're trading with, right? Because there's a lot of traders that'll take 20 accounts and YOLO them for a day. And it's easy to get $1,500 out of the market if you're oversized on one day, like at Apex. But over a period of time, if you've done it tens of thousands of times, how could any psychological, something negative, psychology, how could that come into play unless you got 50 lots on there and you're up 20 grand? Yeah, you might lose the 20 grand. That's when you were in that $20,000 trade, you were probably thinking, what the hell am I doing once it started to go negative? And you didn't get out.
Yeah, because you when you're holding up, it's like, you've seen those memes where they're like praying and it's like, I don't even want profits anymore, just go back to break even. Like
That's a good one.
You get so hijacked. Yeah. You get so hijacked that you're just like, you freeze like a deer.
Just go back to break even.
And then you still don't get out.
That's a good one. You're losing your ass. Okay, I'll quit at break even. I promise. Yeah. Just go back to break even. I love it. That's a good one, man. I haven't found that one. That's a good one. What do you think, Martin? I mean, you're tearing it up, man. So
we're getting there. I was pissed off about Friday for about 3 or 4 minutes, and then I thought, oh well, I'll just do it again next week. And that's powerful because it was a mistake. I didn't gamble my way through a test account. I didn't gamble my way onto a pro account, and I didn't gamble my way up to the buffer. What I did was slipped in discipline, and that's what caused that. But as I said, I'll be back on it again next week. By the end of next week, I'll be back on a pro account. It's just it's a learning curve of what to do and what not to do. My trading has improved a hell of a lot in recent months because I've had a bit more time to dedicate to it. Life's busy with the van and whatnot. But it's nice to know that skill is always there. And if I take a week off, nothing changes. The market's still there. The skill is still there. And you find every day I find something new out about myself, about my behavior during a trade. And something I want to mirror back to what Will said and Sire is that the leverage does affect. I've looked into this. It's the fight or flight scenario with your brain in high stress situations. I can't remember the word, amygdala or something. There's a part of your brain that takes over. That's it. It takes over simple logic and it makes you do things. Okay, I'll give you a perfect example. You're in a great trade. and let's say you're up, I don't know, let's say you're up $300-400. You have no objective reason to close out, none, but something makes you close, and then market continues up. That moment in time, I'm fighting with that fight or flight, because I heard a quote once, nobody becomes a better trader whilst they're in a live trade, because you don't. You make decisions based on P&L, you make decisions based on what the candles are doing, and sometimes those decisions, you might cut your profit short. You might hold too long. And I text Rich the other day, I took a position, it went into profit by a few $100s. I went to the toilet, I had a TP set that was maybe about 8 points higher than where I currently was in profit. I went to the toilet, I came back, my trade's finished. It missed my TP by a hair and slammed down. Oof. And I'm like, why? I had $300-400 in profit. Just close the fucking thing. But, there's mistakes. These things happen. And like Rich said, why are you walking away from a live trade? Well, because it was taking ages and I needed the toilet and off I went. But
what did I tell you?
I don't do that again.
No, I said close the trade and then go to the toilet, right?
I do find that the exit has been the hardest thing for me to, you could say, master. Like I feel like my entries are pretty damn good, but then knowing when to close a position, I find that, for a while I was doing like 1 to 2 candles, and that's it. And I do still do that, but I'm trying to get better at learning how to ride a trend for a lot longer. But my biggest issue has been
what? What?
Like when price is pumping, moving on like a run.
Define a trend.
Sure, like several candles going in the same direction.
I knew that again.
I missed what you said.
Final answer. Final answer?
I missed what you said.
I said is that your final answer? On a trend?
I would just describe it as price over a period of time is going in a upward. Prices are increasing or decreasing sequentially over a period of time.
See, I knew you would answer something like that. That's good. That's good.
It's like I think that that you'll see, like, say, over like a period on NASDAQ, you'll see for like a 15-minute window, or sometimes, man, I've seen some that are crazy, like even 2-3 hours, where price is just continually either just going up or down, where, yeah, you'll see some fluctuations, but it's just almost going in a single direction. And
well, in a single direction, which is a gem. I mean, some traders may not know, but the smaller the candles, the stronger the direction, right?
Well, so. All I'm suggesting is that, like, knowing when to exit, and I've had a big problem with overholding, like staying in a trade too long and giving profits away, like Martin's saying, but then, or doing the opposite, like holding on to a trade and draw down too long instead of just cutting the position, like learning how to be like more ruthless with the exits and taking losses and taking profits more aggressively and without emotion.
If you mix swing trading, and yes, you can swing trade on a 1 minute time frame.
You can, but like that's crazy though.
You mix, yeah.
Most of the time I'm scalping, and I'm always scalping. But like, yeah, when a trade turns from a scalp to like an intraday trade, it's like I've kind of lost the plot. I know I'm going off my strategy at that point, and with take profit, like I have to close my position every day at 5 p.m. Eastern, or you're in violation of like their rules, and so I can't hold for anything more than like that session. And so anyway,
I would look at if the platform you're on, it'd be interesting to see for your own information is what your hold time is, because if you're holding and you're scalping and you're holding, then you need to increase your leverage, because if you're sitting there watching, 1 minute candles, and you're holding for a long period of time, and you're able to hold through the long period of time, then you need to size up, and you need to add leverage, and get out of that market, because the entries are not going to change. Entries and exits are not going to change. The only thing that's going to change that is your leverage. So if you're leveraging more, so that's the thing, is the comfort zone. If you're able to, if you have price that goes against you because the market is breathing and you have the direction right, and you're trading an objective system in the market, and what I've showed you in the market, then when price goes against you, a trader should, if they have the direction right, should be adding into that position, and the market's going to continue to breathe and then continue up to the upward. If we're taking along, it's going to continue up, right? But if we are in a position where we're in there 15, 20 minutes on a 1 minute time frame, that means we didn't leverage appropriately, right? And we allowed the trade to get away, like you said. Now it's not even to what I'm used to, or not to plan, right?
I agree. If you recall, like if you look at my executions, I sent you like 5 or 6 screenshots last night. I have my my charts are like peppered with entries. I actually enter a lot. I find that I will be in a position for maybe no more than like 3 to 5 candles, but I'd say it's just a few. And then I'll usually wait maybe like a couple candles and then look for an opportunity to enter again. So on like a move that's going up, if you look at my executions, like I'm in and out all the way up.
You have knowledge more.
What's that?
You have the knowledge and you have the skill because you've been taught. So you're seeing multiple opportunities up and down the chart.
Yes.
Not just the main move of the day. You're seeing trades within that pump or dump.
It's all trades within trades. Yes.
Mine look like that. Multiple entries. And then I think to myself, well, I could have just entered at the bottom and held it all day. It doesn't work like that. We're scalping. And something that Rich said, if you are going to intraday trade and hit and hold for the whole move, then you can't be in big sizing, because if you're in two minis and it pumps up and then pulls back, that's your account gone.
Yeah. From the trailing drawdown. They have a trailing drawdown against, it's their business plan, right?
Yeah.
They can say whatever they want, but the trailing drawdown is a negative. So it's a negative. End of day drawdown. A lot of people won't trade trailing drawdown because they want the end of day drawdown. End of day drawdown is better. Easy. Therefore, why do they have like some prop firms will have end of day drawdown, in their test accounts, and then trailing drawdown in their funded accounts.
But having it trail your max unrealized gain is for sure like a way to just try and trap traders, like get them to blow up.
It also prevents you from going in high leverage and holding. Because if we all know where to enter and we think, bollocks, we've got 20 micros, 2 minis available, I'm going to hit here and I'm going to hold until I hit whatever. But let's say you've got to get to 1,500 on your buffer.
You can't trail it either. No, the problem is when you try to trail that, it can still get away from you and then smack down. And then people want to say, talk about a skill or not. No, a skill, leverage, a skill comes from like everyday life. Trading is really no different. Once you have a skill, you have to work on the leverage. But here's the thing we're talking about. You don't know when, someone may not know when to get in and out of the market. If you're not looking at your P&L, if you don't have something to learn, like scalping is just not looking at a candle. Because what matters is if you have a trailing drawdown, you need to focus on that P&L. So you need to have that P&L close to you, not over to the right or not over to the left or up high or up low. You have to figure out a computer system or a platform where you can see both the candle and the P&L at the same time. Because you need to be able to get out of that market, especially if you have a trailing drawdown. If you're not able to get out of that market and you don't know what the P&L is doing, and it's not about focusing on the money. It's about focusing on the skill. But all of a sudden, if you get a $700 pump in the P&L, you may want to get out, because if you think you want another 14, or if you want another 700, we're scalping. Take the bag, reset, find another entry, and start over again. But instead of letting it, so you have to concentrate on the P&L and the candles at the same time, and it has to be set up in a way where you can see that. And different platforms you're able to. So what I will do is I will bring up different things that you see in the group sessions, and I will bring that up and show exactly what I'm doing and why I'm doing it, because I want to see both the candle and the P&L. What is price doing? How's the fluctuation, the vibration within that candle? If I'm not able to see, because the candle doesn't tell me the truth.
Yeah.
What else? And the P&L is not telling me the truth either. But what the P&L is telling me is, this is our P&L. This is your P&L at this moment in time. Like you said, you can be in the negative and your eyes will pop out. You could be 3 inches in green. You're like, where's the money? So you have to understand that. So it could be time of day, and I'm not talking about time of day vertically, but it could be time of day where the fluctuation and the vibration in that candle is high, but the candle is not printing appropriately. So you could be down $800 and that candle's barely moving down and really not flexing.
Yep.
But you have to see the P&L and the candle. So to be good at scalping and to help traders is you have to visually see both somehow.
I like to always have the trailing drawdown visible. I even look at that more than some of the other numbers, because I like to know, like, if you think about it, like throttling, like starting an engine, you don't want to like over flood the engine. Like you want to get it the perfect amount, you want to see the leverage. It's like you always say, you want to know how much you have to work with, like contract wise, and you want to have the right amount so you're getting maximal, you could say, return, but without blowing. It's a hard game to know. Sometimes you mess it up.
It's not a hard game on a live account, but when we have rules and we have 50% consistency, 30% consistency rules, which limits your upside. It's not YOLO traders. 99% of the people YOLO, and that's why we have consistency rules.
On NASDAQ, sometimes I've been in trades. So I'll be in trades sometimes, like say 1, 2 minis, and it's the way the candles are printing, it's not that bad. It's not that bad. Like in terms of like volatility. I've been in trades where I'm in like 3 contracts and it feels like 2 minis. It just doesn't make sense. Like the what you're talking about, the fluctuations is so real. Like there's just days where the volatility is so insane that the numbers, the prices feel like they're double and triple what you're actually like leveraging. It's crazy.
Yes. Yeah. And we can only see that by trading. You can explain it to people, but if you don't feel it, if you
have
don't
to experience it,
and if you limit yourself to 1 trade a day, and you want to try to sit here and comment on this or try to give people advice on it, it's impossible. You have to understand the data. And how do you feel about that, Sire? I mean, you're seeing that. You trade on different platforms.
About like just different times of the day, and things are way different. Like the quicker that candle's moving, the higher the risk, the more the spread, the more on point you have to be. So I have definitely been noticing that, like the bigger the candle, the quicker I'm in and out of the trade. When I see slowed down candles that are smaller, but it's setting up a move, I know that move's going to be more worthwhile to wait for than just all this crazy volatility. And I'm trying to stay away from that stuff, honestly. But yeah, like you could hold longer if it's a more steady move or a setup happening rather than just jumping in with these candles that are moving 80 points up and down, and the spread's gonna knock you out. And that's when you get in, market open on NQ. If you're in 1 micro, man, you see fluctuations of $200 off 1 micro, in the morning. So it's risky. Just even you could blow your account with 1 micro in those conditions. So you do have to be mindful of what the market is doing in different times. Because that definitely, you could just blow your account just from being in 6:30 in the morning, and that shit's hot. So different platforms though too, I've had the issues where my TP is it's straight through my TP. 5 seconds later, it gets closed out. I've had problems with Top Step with all their issues. I've had problems with Twant Tower too, and Rhythmic, and then DX feed or whatever it is. So yeah.
It's tricky. Like I've experienced all that too. Like I've researched too how people do algorithmic trading, and there's some people that take it so seriously that they actually get server space as close to the exchange physically as possible. So like they'll find like where the exchange is, and they'll put their computer like right next to it to reduce ping time. And so like there is lag that can occur between like when you're pressing it on your app, when it actually gets to the exchange and back, and all that.
Yeah, it's called money. Money, piece of the pie. Okay, so that's why I say people are shaving. Everyone's making money off of this, right?
Yeah.
So as it's pinging off of different exchanges and finally gets to point A to point B, there could be 3 or 4 different locations that are actually making money off the trade, right?
Yeah.
It is a lucrative business, right? So when a broker says, "Hey, we have no commissions over here," they're still making money. They're making money on your trades and the exchanges. Where is your trade being routed? And if they see big orders, where is your trade being routed? People are taking a slice of the pie. That's why I say this so often. You have to have a skill in the market, because you are basically all of these slippage, fees, exchanges, platforms, simulated, prop firms. By the time you press the button, you really, really have to have a skill, because it is against you. It is against you. And then if you throw gambling on top of that, that's not going to work out too well at all. And the thing that Sire said when he first joined with us is that he sat there for a month, didn't listen to anything else, sat there for a month and sat there on the still charts. Then he went to trading the test accounts and got payouts quickly. And now he's to a point where he says, I don't give an F, right? And that just shows you that he knows how to drive a car. He can drive, right? He can drive. So it doesn't matter who he trades with, where he trades, how long he trades. Are you ever going to lose the skill that you were taught?
No,
Ever.
It's just going to keep on getting better. I know, just reflecting back where I started, and then now it hasn't even been that long, and I'm picking up new things every day, and just knowing when to get in or just being more patient, learning things about myself. It's actually a crazy journey that you go on when you start learning this stuff. And I don't even want to look that far into the future, but I know I'm going to get more payouts, and who knows what happens. But either way, it's not about the money. It's about the skill. And, when you have that skill and you put the leverage on it, you're taking the same trades. There's more money, there's more reward, but it's still a skill at the end of the day.
I remember you sent me a message and you were at Universal Studios.
Oh yeah. Yeah.
And you said, this is from a payout.
Yeah. I took my
That's the benefit.
4 nights. Yeah. It was fun. And that was from Trading Profits, and that felt really good, just knowing that, man, a lot of people, their side hustle, they're putting in manual labor or whatever it is they just want an extra $500 a month. And if you could master this skill, it's so unlimited, but it's very difficult because the teaching out there and the education is horrible. And I feel lucky that I could even refine the skill and make some extra money on the side too, because it's real. This skill actually translates to real money in your pocket at the end of the day. But it is difficult. You got to put your own money up. You got to go through those hard experiences of losing money and feeling down. But, there's a light at the end of the tunnel, I feel like.
What do you think, Will?
Yeah, I wholly agree. I think trading's not for everyone, though. In fact, I would say trading isn't for most people because most people don't have the stomach to endure what it actually takes. I have a lot of friends, many acquaintances. The only person that I've felt comfortable sharing trading with is Sean, which and it's because I know Sean. Him and I go way back, and I know that he has the temperament for it. And I feel like introducing somebody to trading that isn't.
He's taking payouts now. Sean's taking payouts.
Yeah, I know, and it's been it's really amazing because he does a lot of finished carpentry and just a lot of jobs that are difficult, physically, and he does. Being able to now make money from the computer and in the time that it takes, dude, it's crazy. It like I was saying earlier, it kind of destroys your concept of money too. Like what a dollar is actually worth, and it skews it really disproportionately. And I think that's an aspect of trading that not a lot of people talk about, but it does. Anyway, when you compare how much you can make in the market versus what it would cost to make that doing another job or skill that you might have, sometimes crazy. I feel like I kind of went on a little bit of a tangent there, but I'm trying to remember why I got into the topic of introducing. It takes a certain type of person. Yeah. So when it comes to developing the skill, you will lose and lose a lot of money. And depending on how aggressive you are, it can be a lot. I've paid a fuck ton of money into the markets to try and develop the skill, but that's because I've joked that my temperament, I'm kind of like a velociraptor, in Jurassic Park, where they're constantly testing the fence and they're trying to find the way out. I feel like I've tried so many different things, but it's because I'm looking for, in some ways, a shortcut and trying to find the way out the matrix, and I feel like the market will humble the fuck out of you, no matter who you are. It's it forces you to learn, to become a certain type of person with certain type of habits in order to actually get the reward. And if you try and cheat it in any way, you're going to get fucked up.
I think it makes you actually evolve as a person, because when I first got into trading, I was like, damn, maybe I could quit my job one day. But now I'm at the point, this is why I don't mind the risk that I'm taking. It's because even if I made $25,000 next month in payouts, I'm not going to be any different. I'm not going to want to buy shit. I'm still going to go to my job, and I do manual labor for my job as well. But that's what's beautiful about it, is because I could go and work with my hands and make money, and then be on my computer and just do this as well. And that's huge to have both of those. But I grew in the sense of I was desperate for a way out too. But now I don't feel like I even want the way out. I just want to work on my skill at my job. It's a skill set, my skill with trading. And if I take them both in the right direction, it's just going to pay. But it's not for greed. It's not really for money. It doesn't really feel like it's really for money in a way, because I had a good month where I made close to what I make at my job. And after that feeling of being desperate for I want a way out, that kind of just sizzled down. I don't know. It was crazy.
So the word desperate there, I want to double click on and zoom in. I feel like the when it comes to trading, the more you need it and the more you want it, the more difficult it's obviously going to become. It's it's tied to our survivability. So there was a point in my life, last year, 2025 was by far the worst year, I think, of my life, by far, especially financially. And there was moments that were very challenging, and there were moments where I felt like I relied more heavily or needed more the trading to work, and that made trading so much harder. Zoom now to today, I actually have currently 2 jobs that I'm working doing. I'm a software engineer, and I'm working basically for 2 companies, and so now I'm bringing in a dual income, which now I don't need the trading profits as much. So because of that, I'm not, you could say, as desperate. I don't feel as desperate for the money. It's if I get it, awesome. That's just more on top, but it's not a necessity at this point. Because of that, my trading is so much better. I this past week, I got 2 payouts. It was about $3,500. And I know, and it was a lot of it had to do with that. I knew that I was okay. I didn't need this quite as much. And if it's good, it's good. And so,
it will.
I don't know. It's trading. Go ahead.
On the flip side of that, I can completely agree with you, because I'm in the complete opposite situation to most normal people, where I don't have a stable income because I'm self-employed. I have absolutely nothing in my bank accounts, overdrawn, credit cards maxed, loans, you name it. I'm in the worst financial position I've ever been in. But I know with everything in my heart that I believe what Rich has taught us is the way out for me. So apart from it having an effect on my mind because I'm so desperate for money, I know that once that first payout is out of the way, for me anyway, I mean, Rich will agree, that is a massive game changer for me, because now finally I've seen something, and that just reinforces the being good within the market, doing the right things. But what I will say is it does definitely have a negative effect on your mind when you're trading through desperation for money rather than trading through, I call it fun money, tokens. Like I said, he went on holiday with it. Some people buy a car. I don't know. Some people go out and take their family for dinner. There's very many reasons you might want your payouts for trading. But yeah, definitely from trading from a place of desperation is not good. Makes you do stupid things, makes you act in behaviors that aren't beneficial to you because you are under pressure. You're looking for money rather than following the plan you've been taught. So yeah, I can see that if I was sitting here now with an employed job making, I don't know, 50K a year in America, whatever is considered an average salary there, then your mindset is different because you're not so desperate for it.
100%. I agree with you. I mean, I've experienced the exact same. I've been in the same financial situation. 2021, I went through a divorce, and just like the financial fallout from that, and just the things that happened, and man, and then I lost January of 2025. I lost my job, and then it took me so long, months and months, to find a job, even though I was interviewing so many places. And I was to the point where I felt like have the machines completely replaced me. Like I'm now pushing 40. Like software engineering is becoming, like, in some ways replaced by a lot of large language models. And I'm like, dude, has the market moved on beyond me? Like, am I fucked? I went through like this whole period of like depression and like accounts, just like you're saying, just completely tapped and eaten through reserves. And when I was trying to trade in that state, it was so hard because I really needed trading to work. And I feel for you because I know what it feels like. And it does. What you're saying is also true, though. Like once the payouts happen, it's like you start getting some momentum shift. But it's hard because like you're going to be trading in a psychological disadvantage. Like it's gonna, especially as you get closer to the payout, the forces that are going to be like weighing on you are going to be a lot harder. It sucks.
It does. The situation has become pretty bad. I mean, my self-employment has dropped to a point where I've got no work. So what do? Do I go and get a job working in a supermarket just to cover the bills I have? I currently don't have a home. This is my father's apartment. He's away for the weekend. I have access with my children. I have them here. Come the week, I sleep in my van. Sometimes at my girlfriend's. Like, life is shit. But I've got good people around me. Rich is one of them. As you know, he keeps on and he does not give up until you get it, until you start to see progress. He's very encouraging every day. And I needed that because sometimes I don't want to get onto the whole mental health thing, but it does. Life fucks you up. And when you don't have certain necessities in life, like a home and places to wash, it ruins you. And then on the backhand of that, you're trying so hard at something that you're so close. And I don't expect to be a millionaire, but I do know that time will come where the money starts to come in and life becomes a bit easier. And life does this, it goes in waves. And Rich said the other day, God is testing you. I don't know what I did to someone or somewhere to be tested, so I suppose harshly. But I know that if you ride through the lower times, then the good times return. And it's just staying on task, remembering to remember the rules of entries, exits, not taking unnecessary trades, not over leveraging when I'm not capable of enduring the drawdown at 10 micros. My mind can't accept that I'm $400 or $500 in the red, even though I know where price is eventually going to go. I can't deal with that. So I have to strategically trick my brain into taking a 1 micro entry. And then if it pulls back against me, it's okay. It's not the end of the world. It's $30. I'm all right. I'm not going to blow the account. Obviously, I'm wrong because I've entered too early or whatever. But yeah, it's a funny game trading. And just imagine for a second, if none of us had met Rich, where we'd be in the journey we're in. Right. I would be gambling constantly. I have a problem with gambling. I mean, Nick, you can edit this out, Rich, but I've got a personal message for Nick, Sean. And I'd like to say, fuck you, because what you created over the course of 2 years, not only to myself, but thousands of other traders, has left issues with thinking like a gambler that I've had to battle, and you've had to battle for close to a year now, because just by the bounce, it's caused problems. And it won't just be me that's affected by those types of gurus and influencers because they're all doing it. And this whole market and whole industry is just filled with fakes and sell you the dream and everything. And I just wish people like that got caught and got removed from this entire, what do you call it, business. They should not be allowed to share the information they do because it's giving a false pretense to normal people like me, where you join a trading group thinking, well, I'll just take their trades, you know. Nah, it doesn't work. It's wrong. It shouldn't be allowed. And that not just goes for him. That goes for absolutely every single one of them. The people that are on these podcasts, it's all fake. It shouldn't. It's wrong. It causes problems, man, for people. You know, you're seeing them in their Porsches and their Lamborghinis and you think, oh, you know, follow my trades and you'll be a millionaire. The amount of money I spent following idiots like that, throwing thousands of dollars weekly down the bin, following their signals is one of the reasons I'm in the position I'm in financially. So, yeah, you can edit that out if you want, Rich.
What are you talking about, bro? All you need is it's just 50-50. All you need is a 1-to-1.
It's damaging, Will. It's damaging.
I know. It messed with me too. The whole flip a coin thing and 50-50. It's just 50-50. It's like it does mess with you because he puts the emphasis on like just the risk management part and how it's like he's like basically all strategies are it doesn't matter. Price is going to just go do whatever it wants to do. And so just look for kind of a zone and just basically flip a coin 50-50 and just focus on risk management. It messed me up too. I mean, I was in that group. That's
I followed that idiot also, trade by trade for 4 months and lost 11 grand of my money.
Hey, at least, bro, time is passing regardless. At least you're on the right path and you're doing the right things. And before you know it, it's going to be another year down the line.
Yeah.
And you might be in a completely different situation at that time. And you'll look back and be like, wow, man, I really made it through that.
I think also that Nick Sean kind of creates, if you listen to him a lot, it creates this belief that it really is just all subjectivity and intuition, and that there's no strategy that really works. Just kind of flip a coin. When in reality, like we know through experience, like there is a strategy that can work, and
it's not even a strategy. It's the market. It's how the market moves.
Yeah, it has a particular language that can be learned. And I would echo Sire and also say to you that like it will get better. Like I know you're on the right path and it's gonna get better. It sucks when you're in the moment. It's hard because I've been in those positions too. And you brought in the topic of God. Like what is there something that I did? I don't like, why am I having to endure this type of suffering? I've had all those same thoughts. And it's hard to like be in that position and not let the weight of it, take you down. It can be extremely dysregulating when you feel like you're fighting for just like basic necessities, and it's frustrating. It's really, really frustrating. And I don't know. I know it's going to get better for you. I've seen like some of your charts, and I know your level of commitment and dedication because I remember you in the Discord, like in Nick Sean's Discord, like and you've been doing this now for a really long time and putting in the work, and it's gonna come.
Yeah, I will never ever ever stop. And those, I think, once Rich said to me once, if you quit, you fail. And I don't quit. I won't quit. I do not have that mentality in my mind because I watch every single one of Rich's videos. I watch and speak to him most days. I see what he creates. I see the level of skill that he has. And the man himself is teaching me. So it's just a matter of time. Will I ever be as good as him? No. Will I be as confident? Yeah, I think so. And I think that you're on this path. As I've said to Rich, some take longer than others. If you take somebody who's never traded before, who doesn't have a background with just take a bounce, then they will learn the system quickly. But then there's that word you said earlier, subjectivity, where I say to myself, well, this isn't quite in the system, but it looks good. And I think, this is big. Shit, bollocks, there goes my account. So it's a learning curve and a difficult one for me. I learned the system a year ago. I learned that a year ago. That's how I suppose how long it's taken me. Not because of Rich. Rich has done way more than he ever had to do. You look at yourself. I mean, he spent a few weeks with you, payout. Sire, a few weeks, payout. I
do agree with what you're saying, but I don't know, maybe Rich will not like me even saying this, but because of the allergy to things like subjectivity and intuition. But to be honest, I do think there is still some of that in there, not to the degree of what Nick is saying, but for example, I don't want to give away gems, but sometimes the stuff will form and it's not perfect. If you have 10 things that you were waiting to light up on the dashboard, maybe almost all of them are lit up, but not everything. But the way that it's been setting up, it just, it's coming. And I've seen Rich too, where he sometimes will take trades and it's not he will take trades. How can I describe this? If we use an analogy with something like NBA, some of those really great players, let's take I don't know who's a really, really good player, shooter. Just take a Jordan, from the past. He could take shots that most people would not take, and he can even do one off 1 foot if he needed to, and be able to catch it in the net. I feel like when you know the system, you can. It's almost like it doesn't have to line up perfectly for it to work out. Sometimes if you wait too long, if you wait for all the lights to line up, the move already happened, and now you're screwed. If you enter then, you'd actually be entering at the wrong timing, and you can get burnt in too. So it's weird. There is, I feel still some degree of subjectivity that can't really be taught. It has to be experienced over and over and over again before you develop a feel. You know when the wave's going to break, and you just know when to ride it. I don't know how else to say it. You just do.
So I'll chime in. Look, that's awesome. And that's why we're doing this video today, because it's all on the fly. It's great. And anyone can say anything here. Absolutely. It's not going to be edited. Anyone can say anything, because people can make up their own mind and pick and choose what they want to do in life. But I want to get back to the subjective part, okay, and intuition. All right. The bottom line is, from a factual point, I'm kind of not a gray person, right? It's either, the car's red or it's not red. When we get into trading, if we see something over and over and over and over again, that's not intuition. And it's learned behavior. We are actually seeing something that we can identify.
Pattern recognition.
The more times that we can see it, and if Sire sees it 10,000 times and another person sees it 2,000 times, it's not Sire's intuition. It is actually objective in the market. So whether I get into a market that I'm more confident, being more confident doesn't mean I have this intuition. It means I've set it up. There are things in there, are other gems in the market, right, that I'm seeing it set up. I am seeing, because as we heard and as we explained before, is there are some traders that don't even understand what a market reversal even looks like, right? Even if they go back to books and the book tells them what a market reversal looks like, there are some people that don't even believe that. Even if they see it, they still don't believe it, right? So seeing is believing. And then after you see it and you believe it, you have to lean into it. So basically, if I go ahead and take a position and I understand where the market came from and I understand where it's going to go, and based on the information in the past, the higher the probabilities go higher and higher. Now, if we had a dashboard and we had 10 items that we're looking for, hypothetically, not all of them have to line up. Because one thing that we have to ask ourselves is, if we use an indicator, and I have shown the group that, look at this, people use this X, Y, and Z indicator, does it work, right? And I show you that it could be the opposite, right? So the point is, who actually created the indicator? If we throw 100 moving average, 100 moving average on the chart, where did that information come from? Where is the information coming from? Which platform is it coming from? Because if you go from one platform to the next, what you're going to see and find is you may see different candles. You may see a different candle on one platform if you start to compare. If you have TradingView, and then you have Trade of 8, and then you have Quant Tower, and then you have Rhythmic, and then you have, let's say, TopStat. It could be different. But it doesn't change the way that I teach you how to trade objectively in the market. Because over a period of time, and correct me if I'm wrong, but over a period of time, if we understand where the market came from, and we understand where the highs and lows are starting to take place, because we're supposed to sell high and buy low, and we start, no matter what platform we are on, what's unique about this entire thing is when we go ahead and have a trade that comes out, there's so many different traders that say, wow, I was in that same trade, but they're not on the same platform. They're not on the same platform. That's what's unique. So intuition is completely different. It's not intuition. When I see a fastball and I am up hitting, and all of a sudden I see the spin, the release point and the spin coming towards me, I know it's not a fastball. It could be a slider, curveball, a changeup, right? So we pick up on the spin, right? And we understand that. And it's hand-eye coordination coming in. It's not intuition and what we think he's going to throw. We see it. Go ahead.
I was gonna say, I totally get what you're saying. Like, it's those indicators, the information getting presented to us it's getting filtered, it's getting compressed, it's going through some algo before it even comes back and gets represented to you on, you could say, the dash. And so, like, they're especially during periods of high volatility, those indicators are all lagging. And so, if you're waiting for those to align, like, you could have missed the moment. Where if you just pay attention to just the candles, the price action, you can see, like you're saying, the wind up. You can see the way that the ball is coming at you. That right. You can, and Sean and I have been trying to do this actually recently, where we've been trading with a completely naked chart, like, and just looking at the price action and seeing, like, the wind up. You know, just because right. Like, it's kind of fun, and it's also to increase the skill of just being able to see it without any assistance, you know.
And without giving information out, I'll tell you that the reason I had set up the program is for people that second guess themselves, right? Because, to be honest with you, I have to, like, if I'm going to use indicator or anything on my chart, and I'm going to send a photograph to the group, I have to all of a sudden load these things up and show you, hey, listen, this is what you see on your chart, right? Yeah. Because there's a lot of people that second guess themselves, right? And these are possible some indicators or some other things to say, I don't know if I should be in this right now. So what you're telling me is you've already reached a level, and it's not a goal, but a level, and you are right. You're right. Because I don't trade with them. You're right. Okay? So, but when you train and you teach and you have people, and it's not about indicators or anything else, and when we talk about lagging, the only thing that's not lagging on a chart is the most current candle.
Yeah, current price, active price.
Correct. The most current candle. And it would be the seconds, right? So, but everything that's lagging, so when people talk about lagging, I know you didn't speak on the behalf of what's lagging and mean it this way, but you have all these traders that cannot trade, and then they say they don't use indicators. I'm not a fan of indicators, but they don't use indicators because they say they're lagging in price. Well, is it your 2-week zone, or is it your weekly chart lagging? So if your weekly chart is lagging, why are you picking a horizontal line on a chart that's 6 months old, 3 months old? Isn't that lagging? So the indicators, any indicator that you use on the chart is more current than a support and resistance zone. That's a fact. It's a fact. So, and all it is it goes back 20 candles for 20 moving average, right? Or 100 moving average. It goes, so isn't that a lot sooner than a higher low looking left? Of course. So right. We get into these words of lagging and not picking on you at all. What we're saying is lagging indicators, and you moving to the level of a naked chart. Hell yeah. I like it. Hell yeah. Because a naked chart is kick ass. Kick ass.
I agree. Like, once you start seeing it over and over and over and experienced it, you could just, I keep using the wave analogy, but it really is like being in the ocean, and, like, you get a feel for the way that, like, the sequence of waves are coming, and you just know when, like, a big wave is building and when it's about to, like, break, and you just know when it's going to happen, and you can see it. And I don't know, I wouldn't say I'm the best trader, but the amount I've developed since being with you is night and day. It's crazy, and you've really helped me to be able to know, like, how those waves get formed is the best way I can describe it. And through my own experience, I've been able to then see it over and over and feel it over and over, to where that's why I don't always trust all the things that are getting printed to me. I just I just know
number one.
Yeah, I just know it based off the candles. And sometimes the way that the active candle is, and the way that the jerky movements that it'll make, you just know. I'm like, I know this thing's going to fucking break. I can feel it. I know it. And that's sometimes when I see that.
That's not intuition. That's learned behavior. Yeah. Because if you're focused in, think about it. Okay? It's not intuition. That's the next level, right? So we start off and we learn a system, right? Objective in the market. And not only do we have a system that's objective in the market, we have things on the sidelines that says, you're in the right place. You're in the right place. You're in the right place. Believe it, and lean into it. If you believe what you see, that's fine. But now you have to apply it, and you have to believe it, and then start to bank those positive vibes, right? Because if you get into a trade and you lose, then I'm going to ask, okay, show me your execution. And it's going to have to meet what I'm teaching you, right? I mean, it's going to have to meet but now you know where you screwed up, and it's not based on your intuition. It's based on whether you got in the market too early or not, based on objective evidence. So now if you look at a naked chart, and you look at a naked chart, you're probably going to get in quicker. Okay? You are going to get in quicker. But I had said, and I teach in a way of why not to get in quicker sometimes. Okay? Because the market will manipulate traders, get them in, spit them out, and then make the move. Right? So the probabilities go down getting in quicker, right? They do go down getting in quicker, but to understand where the actual weak hand in the market is your highest probability trade, and to get that push down or up. That's where
see that on a naked chart, no matter what, you're still able to see that weakest hand on the naked chart. And then even me, I've done this a lot too, and I have been trading like that actually. And when I populate,
everyone's coming clean now.
When I populate everything back on, it's right on the money. It's right on the money. So
I told you
that's why it's more like guidelines, because once you look at this stuff enough, then you could go with the naked chart, and then it's like this. You could see everything in your head, anyways. Because when I do this, because I populate it just to see where I'm at, and it's on the money, man. It's the same shit.
That's what I said. That's not called intuition, right? Yeah. That's not called intuition. When everything lines up, and you can trade off a naked chart, and I trade off a naked chart, and when everything lines up, right? You can go back in history, everything that I showed you to keep you in the saddle for the training purposes, right? For the training purposes, everything lines up, everything. And I'm here to say, show me when it doesn't. Show me when it doesn't, because when it doesn't, we need to look at it, right? But if everything's lined up, it's going to line up, right? So if you have a naked chart, so there's areas that I say, hey, listen, I understand you want to get in here. I understand why you want to get in here, but your probabilities go down in this area. And this area is for the market to shake people out, because the market is not prime. And if people are doing crossovers and only buy when this line is above this line and only sell when this line is below this line, the market is breathing in and out and going into expansion and contraction phases, right? And you don't want to get into, there are contraction phases as it breathes. It's like we don't stop breathing for an hour and then pick up and start breathing, right? Or we don't inhale and hold it for an hour and then exhale. So as the market's breathing, contracting and expanding, when it gets into this contraction phase and possibly going to change, we understand that. And that's the phase that you don't want to get in, is because when you get in early and it's still in that contraction phase to change, that's when you can get wiped out if you over leverage and you're trying to front run something that you don't see. That intuition, I've seen this before, but you have no objective evidence in the market, it will eat your accounts alive. Because that's when I knew where it was going. I got in too early, but I didn't have an objective reason to get in too early. Does that make sense? So your intuition can be based on, now listen, so people that have some intuition, right? Your intuition or subjectivity can be based on something, but they simply don't know how to explain it. They don't. Yeah. So if you question them, they don't know what they're seeing. They don't understand the market. Does that make sense?
100% makes sense. I mean, you can have a lived experience and be able to like know something's good. Like, how can I word this?
It's a hunch.
A hunch, but if you had to articulate like why, might be hard pressed to explain it perfectly. I think you're right.
Here, quickly before you get onto that subject, intuition, a hunch, shoulda, coulda, woulda, and none of that can be proven. Absolutely, none of that can be proven. None of that can be teachable. None of that is repeatable. That's facts. So if none of that can be proven, the problem is in the trading industry is when we tell people that they're just going to get it. I've been trading for 5 years and something just clicked. That's not teachable. And that's not proven. We don't even know if they're even being truthful. And with a $1 trillion fraud industry of people trying to take advantage of everyone, creating a course, a very basic course based on what a candlestick looks like, and highs and lows, when the market goes up and down, what are we going to have? Highs and lows from the seconds all the way to the weekly or monthly or yearly. We're going to have highs and lows. So what would we expect to have if I throw a ball on the ground and it bounces up? I'm going to have different highs and lows until it rests on the bottom. So now tell me something that's not, obvious in the market. Well, we create highs and lows like a ladder. Okay, geez. Now tell me what the market does when it goes down. We have a lower low and a lower high. Okay, geez. Did we have to pay for that information? Because it's obvious. It's right there in front of us. It's not intuition. It's obvious right there in front of us that it's creating a higher. Well, look at a ladder. Look at steps. Right? When we go up in steps, then we platform, and then we go back up steps, and they have the steps a certain, maybe 8 inch, 7 inch, 7.5 inch, whatever the regulated thing is. And eventually you're going to get to the top by a higher high, a higher high, and a higher high. Okay, look at any chart, whether it be the COVID chart, the flu chart, all of this chart. And then go back to what I teach you. And you're going to see shit. You're going to go, how in the heck does this happen? Right? You're going to look at the charts and you're going to look at the data because it's numbers, right? It's flexing. right? And it's numbers. And then the numbers come in. That's why I say that how is all this stuff put together? Because how can the market move if it wasn't an algorithm? The market cannot move unless there was some type of algorithm in the market. And then all of a sudden, when we go back in history and we see the same thing over and over and over again, that is not from a human being. That is not from a group of human beings. That is not from money. Now, it may get there faster and it may get there a little slower at certain times. But remember, news and money, buyers and sellers will speed up that process. But the process is still the same. The process is still the same. So if a market is designed to go up, where do you think it's going to go? All the way down? Okay, so I'm going to charge you $5,000 to teach you how the market operates. Well, geez, the market's designed to go up. A lot of people don't even know that. If the stock market is designed to go up, where in the hell do you think it's going to go? So does it take a trader with a skill to invest in the market? No, not at all. Not at all. It takes a trader to get in the market at the right time with the highest probability, take those profits, and get out of the market. And when you have a skill, you can trade short and you can trade long in the market. When they say it's going sideways, it's still sideways on what? Sideways on a minute or sideways on a daily? Because if it's going sideways on a daily, guess what? It's tradable a whole lot. But we trade on a 1 minute time frame. So when it goes sideways, we understand what the market is doing. And the more trades that we take and the more executions we have doing the right thing, that's going to be something inside of our body that it's learned behavior. It's learned behavior, not intuition. We want this thing of saying it's an intuition. I understand what price is doing. How can I walk you through the market on the candle per candle and explain what I am looking for next? Do you think that's my intuition or do you think that's my experience in the market? Anyone want to answer?
Yeah, I think you used the perfect phrase right there when you said like learn behavior. That is a better way to describe what I'm trying to point at. It's through learned behavior, when it's like go time or not.
I'd like to add to that is that trade I was on not a call with Rich. I was chatting to him through Discord and it was setting up and he was telling me candle by candle as it was happening what to do. And as I've said before in a previous video, for a person to, and he's not guessing here because you can't guess, for him to know what's coming up next, knows that he's seen that thousands, possibly tens of thousands, maybe even more times. And it's the same thing that you know what I'm talking about without giving up source, but it's incredibly powerful to be able to be taught that it's coming, just wait for this. When it does that, then you do this, etc., and then it's go time. That's not taught anywhere else in the industry. We're all taught take a bounce. If it gets to this zone, set an alert, and then wake up in the middle of the night, hit sell, and go back to sleep. Yeah, that doesn't work. Bro, if a person can call it out candle by candle prior to it actually happening, that's not intuition. That's learned behavior of the same thing over and over again. So whilst we've been on the call, I've just gone on my charts and made them all naked. That I actually prefer it. That's actually quite nice to look at. Because you know why? I'm like, I've got screen space.
I'm agreeing. Yeah. I agree.
I'm going to say something without saying something, but there's two very important things that I'm keeping at the bottom, which you know what that is. But the rest of the other stuff, I've taken it off for the minute.
Sometimes I'll even turn that off. If you're on desktop, if you double click on the screen, I'm in Trading View, it'll hide them. And I think I'll do that sometimes. It's nice practice. Like sometimes like having too much information can be distracting.
Yes. And I'll tell you for why, because even I've just gone back through other days' data without certain things on the chart. And I'm like, oh, damn. It's even clearer than normal.
It's more clear. It's more clear.
There's not all this other not objectivity. And I don't want to say rules, but there's not these other things that, I mean, we've all seen the outcomes thousands of times over the past years, days, whatever. It definitely clears it up because I know what I'm looking for because Rich has taught us. And it's very, very easy to see on a naked chart, even easier, weirdly. That's funny because I never thought, I can't dare take that off
you can get in a bad position still that way, like you said, and you can get in too early that way. But it is clear where it's going to go. It's a lot more clear to...
I think the best way I could probably describe it is that, with being kind of vague, is that what you've given me is the ability to identify like pivot points in the market and know when the market's turning so that I have like a very high degree of certainty which way the market is going. Like being able to know what side, like literally that's the biggest skill is like if the trading is like a river flowing, you're either swimming upstream, which is no one can do that. Eventually you're going to gas out, or you're with the stream, and you've taught me to know which way it's going. So even if I get it a little bit wrong, like eventually it goes in my direction, almost always, because I know which way it's flowing. But you get really good at, once you know which way it's flowing, to jump in at the best part to catch like the strongest like pushes. I'm getting a lot better at that. Like I have
it's a language. It's truly a language. Yeah. That's why I say when you trade a chart, it is I try to explain it as a foreign language. It is a foreign language. It is a book. It is a book of writing. Say picture like Chinese writing, right? I mean, that's a very difficult language. It's just a different language. The chart's a different language. And once you understand that language, it's like reading a book from one page to the next. When you understand that, going up to a higher time frame is like, if you're bored on a one minute time frame, going up, could you imagine what it would be like taking a trade on an 8 hour or one?
I used to do that. I would swing trade. The longest trade I was ever in was almost 2 months. I was in a trade. It was GDP CHF. So,
oh God, Swiss franc. I'm probably in the same trade as you.
Dude,
the alley cat pair, man. The alley cat pair. That thing's a dog, man.
I've been in some slow moving trades. I don't know how I endured all that, because I bought into a lot of the videos. Like, so many people talk about how the easiest way to become profitable in trading is to be a swing trader. And so I was like, is that true? Like, let's try it. And no, like
they don't know what compounding is.
Dude, it takes so fucking long for those trades to pan out that I feel like your rate at learning is way slower, because like from beginning to end, you're just having so many like fewer trades that you're not really gathering a lot of useful information in that time of like what went right and what went wrong. You know?
So that's not your intuition. That is not your intuition. How can you have intuition taking 1 trade, 2 trades, maybe 5 trades in a month? Intuition is a word. Right. Intuition cannot be proven. Intuition, as I said back, and I did videos on it, look at the facts and evidence versus all of this word salad and intuition, right? So what all of you are telling me is look at where you are at, because all of this trading, when I say forget everything you learn, forget everything you learn, forget everything you learn, we have to understand. We have to understand that if we forget everything we learn, what we do know is we know what not to use, what's not working, right? So that doesn't mean that was wasted education, right? All that means is that's our experience, right? That's experience. That wasn't intuition. That was experience, learned behavior. So now you know that if you go down this, if you turn left prior to your neighborhood, it's always a dead end street. How is that going to change, right? So why keep turning left if it's not working, right? So insanity is doing the same thing over and over again, expecting different results. If you're 99% not profitable as a community, then it's not because traders are not intelligent. It's because there's a lack of education, a lack of appropriate education in the market. And it comes down to objective strategies, objective evidence in the market. Objective, something that you can have. I don't care what it is, as long as you can go back and find it in the history that repeats itself. That could be something that's objective, that it could go back in history on any pair, any time frame. Traders, the first time that they say, oh, listen, no strategy works for everything. If it's on a 4-hour strategy, it doesn't work on a daily strategy or a minute time frame. It's wrong. I have shown you that that's wrong, because if you can, it starts, all it is smaller on the seconds, then the minutes, then the 10-minute, then the hour. It's the same algorithm. It is the same algorithm that is actually forming within. Seconds are forming within the minute candle, and the minute candle is forming within the 5-minute candle. And then it goes up and up and up and up, and then it settles at a yearly or a monthly candle. Well, you can look at a monthly candle or a daily candle and have so much information in that candle. Nobody can tell me and convince me, and they wouldn't be able to convince you that they can look at a daily candle and tell you what the hell's going on in it or where price is going. That's just like stupidity, right? So it's intuition. No, it's not intuition. I had a group session last time, and I showed them a candle. And I said, all of these traders are going short. I guarantee it. Does anybody disagree that they would go short based on all of the information all over the internet? Big ass red candle, right? And I said, traders, are we short or are we long? And they said, we're long. And I asked them why. On a big ass red candle to the downside. Well, because they were able to understand what the lower time frames were inside that red candle. So it's objective. It's not intuition. And what happened? So that's not intuition. It's actually seeing something on a bigger scale with, okay, I have 1,440 candles to look at versus I have 1 candle, right? Or in a daily chart, right?
Generally speaking, I'm on the 1 minute chart for like 99% of the time. I have noticed that if I use any other time frame, the only one that's kind of useful to me when I'm scalping is the 15 minute. Sometimes, like if I go to the 15 minute, I can see it's just price in the aggregate. It just compresses price a little bit more. And when you're doing 1 minute time frame on the 15, sometimes I can like see easier, like, oh, we're in a phase of contraction right now. Where on the 1 minute time frame, I may not have been able to see it as clearly. Sometimes it's a little bit more obvious on the 15 minute for me, but I'd say 99% of the time I'm only on the 1 minute. It's just like you're saying, you see patterns occurring, and those patterns are occurring on every time frame because it's just price visualized over a different period of time. Like it's doing the same things. Like the if you think of it almost like I don't know, throwing a rock into a pond or something, like it creates like reverberations, like waves, and it first occurs on the 1 minute time frame and then it flows out to all the others. Yeah. And so anyway, I trading's awesome. And
we get older by the second, not by the day.
Yes. I find there's more gems on the 1 minute than there is on the 5. The 5 is no. I've been taught like you guys on the 1 minute, and the gems are there, and we can see them. When you move up to a higher time frame, they're there, but they're not as frequent, and you've got to wait a lot longer.
Yes.
You're missing opportunities.
I don't think I could sit for a full 5 minute candle without knowing what's going on.
No,
this may be I don't know.
Don't say it.
What I say is that sometimes I'll zoom out. Sometimes I'll
don't ruin the video.
Sometimes I'll zoom out on like a higher time frame, say like the 15, and I'm looking for the gems there. But like you said, there's fewer on there. Okay. And so we know that there's like opportunities within opportunities. So it may not happen that frequent on a 15-minute time frame. You zoom into the 1 minute, there were several opportunities during that time frame. Now, what I find is that if I wait for the opportunity to present itself on like say the 15-minute and then go to the 1 minute, when that thing happens, like when those breaks happen, they're way bigger. It's like the move is way bigger. You've got like big waves and little waves. And I'm being like vague here, but like when it breaks on the bigger moves, the breaks are way more violent. And so it's helpful.
Well, it would be anything. Like when we go into investing, I have a swing trading course, okay, and the moves on the swing trading strategy, which is not the same that I teach here. So, but those moves too. I mean, the higher time frame that you go up, I mean, obviously the bigger moves. But if you're actually talking about a stop loss, what people don't really understand, the higher time frame you go up, the bigger. If you use a stop, the more risk you're going to have to put on the chart. Okay, if you're not using a gambling strategy, you're just gambling. You really have no objective strategy in the market. You're just willing to take the higher time frame you go, the bigger stop loss you're going to need. Right? Because in order for the daily to breathe, you're going to need a bigger area, right? Because all of the time frames below the daily have to breathe also. So we trade on the lower time frame. For one, we get more experience. We see it more often. This is not a full-time trading job. Okay? It's not a full-time gig, right? You get in the market, you make it, and you can go in, like what Sire was saying, have a job, right? So if the market allows him, depending on what time he has to go to work, he might have a 2-hour window prior to getting to work, and he can wait for the perfect opportunity with the highest probability to get into the market, get out, shower, and then go to work. That's not a full-time trading job. That's trading smart. A lot of people want to say I'm a full-time trader to guide you in like, whoa, what does a full-time trader really mean? Does a full-time trader mean that you take a daily entry and you're a swing trader for the entire month? That's not full-time. So we have to look at how often we trade, how often do we see the setup that's objective in the market, how often do we apply the knowledge that we have, how often do we take it without hesitation. If you're taking a trade without hesitation based on your knowledge, that becomes learned behavior. Every time you take that trade, that's a positive vibe in your pocket. Do that tens and twenties of thousands of times, hundreds of thousands of times, and tell me that trading is intuition, right? Or a hunch. No, that's someone preaching to the public that is selling a course, saying it's okay. You cannot have a high hit rate. What do you mean you can't have a high hit rate? What professional? I mean, think of all the jobs. If you can't make a cheeseburger the same working at McDonald's, do you think you're going to be working at McDonald's? Does your hit rate have to be at 100% possibly? Or 99%? Right? So why is trading any different? Why would trading be any different? Why is trading the only thing in the world that you don't have to be perfect on? Or close to? How? How about the mechanics in a car? Sire, if you need a car to fix or something, just send it down to Sire, right? I mean, think about it. Does he have to be 100%? Or is 80% okay? How about 50%? Are you going to get paid if you're 50%, sire?
And I'm putting people's lives in danger if it's not 100%, you know?
So you're putting your account at danger. If you want to incorporate, if anyone wants to incorporate, and I understand what Will was saying about intuition, I understand what he's saying, right? But if anyone wants to incorporate intuition, I think, I know, I believe, I've seen this before. I just don't know how to explain it. It looks good. I want to. I know I shouldn't, but I'm going to get in anyway, and I'm going to put a stop loss in the market. You're going to lose. We do not have more money than the market, right? So it must be objective. If it's not objective, then don't take the trade. If you haven't seen it before, in other words, learn behavior, not feeling. I have this feeling the market's just going to go down. I have a feeling. You know how many times I said I had a feeling and I blew up based on a feeling? We can all admit that. Martin gets in too early. I knew it was going up there. Yes, you knew it was going up there, but not at that time because you got in too early.
Two candles
you
too
didn't
early.
have confirmation it was going to go there.
I know.
Right?
But then that's a blessing. It's a blessing and a curse in some ways because I can see what the damn thing's doing, but it's so good at manipulating me. And sometimes I sit back and I'm like, fucking thing's going there all along, and I somehow managed to F it up in the process. That's the problem with me, though. That's not an objective thing. I am too early and I'm too impatient and cause my own problems. When after it's all said and done, and I can't go into details, I go, and there's a reason for it. There is never a reason I've lost where the system is wrong. The system can't be wrong. It cannot be wrong at any point. So if I've lost, it's because I've gone against the system, or I'm too early, or I'm too late. And if I'm too late, i.e. getting in after the move's gone, that's stupid as well. So
it's leverage, you know. If you have the appropriate leverage, like when it pulls back and you have high confidence, it's like Rich says, you just smack that shit again. But if it's too high leverage, it's gone. So I try and I like to leverage high too, but high enough to where if it goes against me, I could either double the position again without blowing the account, or adding at least a couple contracts along the way that I'm not too over leveraged. You want to have some bullets in the chamber that you can still pull.
Yeah.
Yes. He said that before. He said there's no point putting all your bullets on one particular entry, so to speak, because you've got no more bullets left in the gun.
And here's another thing. If you go to the Dow, if you really want leverage, right, just switch over to US 30 and you're going to have even more leverage. So if you're on the micros, switch over to the Dow and you're going to have more in the chamber, right? And it trades the same, right?
I mean, I had 30, but I put too much on too quickly. The thing is, I hadn't done that for 2
So if you're putting too much on too quickly and you went to the US 30, you might be all right? Yeah. Because it's but once again, it's not baby food over there. It's just a different leverage. So if you go to gold, silver, platinum, all of these different things we have to learn. But Will, yes, you're right. When we have a hunch in life that, hey, something doesn't feel right here, or you have, you heard something in the car, and you're like, you know what, that didn't sound right. Right. And you just know it, right? You don't know what it is. We just know it. Yes, that's true. We learn, right? We learn the senses, right? We have all these senses, right? And we think, something's not right. Or they say it's not supposed to rain today. But you could actually smell the humidity, right? And you're like, man, this shit's going to be pouring here. And you look to your left or you look to your right. And like, that doesn't look good, right? That doesn't look good. Will it rain or not? We don't know. And that's the problem with intuition, right? So then we look at the clouds and we start to smell this dampness or feel this dampness, and we don't see the drizzle or nothing coming down. We have this intuition that will it rain or not, right? But we can't prove it. We can't prove it. And if we're trading on something that we can't prove, it's not, when people go, oh, don't add into a losing position. Well, what's the definition of a losing position? Because you don't know until after the trade is over. So how do you not know when to add into a winning position? You see, they want to pick winners and losers based on their fluctuation of their P&L. That's not how you trade. That's guessing. How can someone be consistent with if they have a stop loss and it goes into the negative? How could they be consistent with their with their process, seeing candles fluctuate and having their P&L in the red fluctuate? How do they know when they got out and they say, I had great risk management, I got out. I got out before my TP was hit. But when it goes barely in the green, they're smacking it to get out for small profits. They'll sit 20 and 30 minutes in the red, and they'll sit 1 or 2 minutes in the green, right? And as we know that, it's a fact. Have we ever done that ourselves? Yes, of course, right? We're like, whoo, no way, baby. I'm getting out, right? So that's before, right? That's before. So you may get in a gambling thing and you go, I know I'm not supposed to be in here. And you tell yourself, As soon as that shit's break even or close to even, I'm getting out because you know you shouldn't be in that trade, right? So you were hoping and praying, right? Until, like you said, just allow me to break even and I'm out, right? It's true. So we can't trade on intuition. And that's my humble opinion. We cannot trade on intuition. We can't prove. How do we teach it? Right? We can't teach it. We can't prove it. Therefore, I could tell you, oh, it's intuition, you're going to get it, and never tell you about a strategy or where the highest probability is. Nothing is guaranteed in 100%, right? We can over leverage. We may have news come out, right? But if we know where price came from and where it's headed with a high probability, now we look at probabilities. So we have to invest. We have to take trades on the highest probabilities. And then the final words. I know, man, we've been here a long time. I'm sorry, right? I mean, where's the beer and the drinks and everything else going on, man? It's like this guy. We started at 8 o'clock and it's what, 2:30? What is that? 8? I mean, come on, Rich, right? 6.5 hours of free, and we all have families and stuff to do. And I didn't realize it was going to be long.
The UFC fights are about to come on, man.
I literally was thinking the same thing, dude. I was like, I want to see Patty fight.
Yeah.
Okay.
Justin Gaethje.
So final quick words. Final quick words to give some advice. Just final quick from everyone.
Advice for who? From you or advice to other traders?
You can give me advice too.
No, I'm saying advice from you.
Oh, whatever you want. Just final words to the community. Go ahead, Mark.
If you're struggling, book Rich's course. It's not even a course, really, is it? It's like a masterclass in what the market's doing. I wouldn't say it's a course. Here's a candle. This is what a candle is. Here's a doji. It's none of that. But if you actually want to learn to trade, and don't take me as a person to look to, but look at, Will, Sire, they're all on regular payouts. It shows you that with the right education, the impossible is possible. Very possible. So yeah, that was my final word. I'm going to go and study patience over the weekend and how to sit on my hands and not click buttons. So I know I'm right, and I know that sounds cocky. I know I'm right. I'm just too early.
Dude, it'll come. It's going to come. I would add to that. I would say my wife likes to often liken trading to fishing. And I feel like if anything, the skill that you've taught me is to know where the fish are going to be and where I need to go, where I need to be in order to catch the fish. So you're not wasting your time out there, or wasting resources. I echo with what Martin was saying. The skill that you've given us is it's life-changing for sure. It's crazy. And knowing that it's not no one can take that from me. I can literally use a phone, any kind of device, as long as I have access to a chart, I can understand what that chart's doing and have with high degree of probability know which way it's going to where I can profit off of it. It's that's insane. That's insane that I've been able to develop that over a short period of time. I was trading for so long and had, in hindsight, dude, I listened to Nick Sean, I journaled stuff. I go back and I read those journals and I'm like, I didn't know what the fuck I was doing.
Hey, Will, stick some support and resistance lines on and realize how stupid it is. Put it on the chart, you're like, what's that?
I know, it's crazy. And I go back and I read my journals and I'm like, I didn't have a clue what I was doing. And it's
no one does. That's the thing. Nobody knows.
You're right.
Nobody knows what we know. And it's actually crazy, scary.
Because when you now that you know too, I can spot a fake one and a real one from a mile away. You can just see it. When people start talking, they'll just say there are a few things that are just dead giveaways. And you could just tell when someone actually knows the language or not. I guess similar to someone who is a native speaker. You may be able to fool most people, and you're like, "Fuck, I don't know Mandarin, but it sounds like Mandarin." But it's so maybe he knows what he's talking about. But then a native speaker is and it's the subtleties too. You remember that movie, Inglourious Bastard, and the guy puts up his finger to do a number 3, and it's just not. It was a difference between this and this. He knew that he was not who he said he was. I think there is an actual way to know the language of the market, and I'll forever be grateful to you, Rich, for what you've shared with us.
Likewise.
It's been awesome. It's been an amazing journey. I love trading. It's the hardest thing that I've tried to develop. And I do wrestling, I do jujitsu, I do it 4 times a week, and I go against these fucking massive polys, and it's the most painful experience sometimes, just getting hungry.
But you're learning, right? You're learning.
I'm learning. It's hard, but nothing has beaten me down and fucked me up more than the market has. And it's
respect.
I'm so grateful to you though, because I'm getting banged up less. And I'm learning a lot more, and I'm seeing more and more success. And I can't wait to see 5 years from now, 10 years from now, like with doing the same shit over and over and over a day, like I share my charts with Sean like daily. We're just exchanging charts and showing executions. And it's crazy to me that like we're taking different trades, but our charts, like our executions look the same. And it's like, you've given us that. And so yeah, thanks. It's trading is so hard, but so rewarding if you can endure it. I think of like the movie Men in Black when at the end, like Will Smith's character, he was just offered to join, and they let him know, like, if you accept, though, you basically become a ghost. Like no one, you're gonna have to cut ties with people. And he's sitting there on the bench, like overlooking, I think, the ocean at sunset. And he asks him as he's walking away, he's like, "Is it worth it?" And he's like, If you're man enough, it's if you can endure it, it's worth it. I think trading is worth it. It's just you're going to have to pay a very, very painful cost to develop it, and you're probably going to get led astray by a lot of people because there's so many fucking fakes and people that are trying to take advantage of you. It's going to be so hard to know who to trust and who the real ones are. But I promise that Rich for sure is a true G. He's a real one. And
the only one. He's the only one I know of, and I've said that from day dot. I do not know anybody
in the
that
first.
Can do that.
I remember, like, when we did the initial calls, there was some stuff that he said right in the beginning where I knew instantly, because it's not a knock to Rich, but like some of the stuff that he said has been like right in front of me, and people, it's out there. It's stuff I've heard before, but he has a way of marrying it in such a way to where it's got like a coherence, uniformity. But there is something in particular that he said that I have never, ever, ever heard anybody say outside of, like, and I've literally read and have digested everything. And as soon as he started talking about that, I was like, okay, he definitely knows stuff that other people don't. And it was just obvious. And but yeah, you are the only real one. You're right, the only real one that I've come across. And I've met a lot of people.
If word got out about what Rich knows,
yeah, I'm worried about the stuff.
Top firms would go under. Seriously. If I was going to say earlier, if you gave Rich a 25K live account with no rules, no drawdown, no nothing, and I don't know, 10 minis in terms of leverage, how quickly do you think Rich would get that to 100K?
Yeah.
In a day, 2 days, there's no limit because he just keeps doing it. Same for you guys as well. If there were no rules to prop firms, and I'm not talking about YOLO trading, taking the same system, same trades that we take, but without all these drawdown rules and fucking leverage rules, it's scary knowing what we know, what's possible. It really is. I'm
worried about the information getting out some way and like the algorithm changing. Like I look at the profession.
It can't. You know why? You could go back 25 years. Do you think these big banks, do you think these big institutions don't have some type of program to try to figure it out? And these big institutions have their own bots, and they have traders sitting there watching, and they're not actually trading, they're actually viewing stuff, right? But they are hyper scalping in this algorithm. We go back 25 years and it's the same.
You're right, but I'm just saying like the technology. So like, for example, we have, if you look at the profession of trading, it dates back from the beginning of time. Like people are always exchanging goods and services and trying to make a profit off of the margin. But if you look through time, the way the ledger system of how they record those interactions has evolved and changed. And like right now, you're right, like in its current form where you're trading electronically, with the internet but like candles has existed like, oh my God, centuries and centuries ago in Japan. Like, and then the way that those have come to today, like electronically, is in its current form has existed, like you said, from maybe like 30 something years. I don't know the exact amount, but I'm just looking at the landscape now with like the way that artificial intelligence is developing and machine learning and all these things. Like, will it in time take different forms and shapes? I don't know. I have no clue. But
I'll tell you off the record, well, not in this video, but I have explained it before. In the group that it doesn't matter what it's going to do. It doesn't matter what it's going to do because we'll be able to trade it the same. It doesn't matter.
Is I'm gonna take the skill that you've given me and try and run it up as much as I can before they change it and just buy.
Hopefully, no prop firms are listening to you. Hey, you'll be banned. Hey, why do you think I'm banned at Apex?
I'm gonna run it up and buy land.
Well, no, but I mean, why do you think I'm banned? Why do you think a prop firm banned me?
Yeah, because you're too successful. They don't want to pay out that much.
Well, they don't want the risk, right? They see a risk. They're like, okay, we don't care how much we paid him. If he gets a hold of $200,000-$300,000 accounts, right? And I'm not just saying that, but think about it. Why am I only down to one account with TopSnap? Why me? When they can have their own employees sit there and keep blowing through all of these accounts, losing their entire life funded account, which is thousands and thousands, maybe hundreds of thousands of dollars, losing that, still being employed, right? And still being able to buy. Why limit real traders? So that's the whole thing, is you limit real traders. So if they're looking for a real trader, like, that's why I like Take Profit Trader, right? It's because the guy came from a professional background, hockey, and he understands skill. And so we are able to capitalize on that. So I really believe that more companies are going to allow real traders to trade with them, and the gamblers and everyone else is going to be weeded out. But how about you, Sire? Go ahead.
Sadly, they're a necessary force. Like, you need them to get kind of chewed up so that the props can persist, so they can pay out people that actually know how to trade.
Yeah.
Here's another thing. It's a pattern. I go ahead and hit it hard throughout the week. As I'm taking payout, all of a sudden it slows again, right? It's not consistent. And then if I go away a little bit and then come back, payout, slows quickly again, right? So that's a pattern, right? I see the pattern. It's not like one and done. I can see the pattern of payouts. I can see how quick they are. And then I go away and then come back, payout, slow payout again. And then one time it was like slow. I'm like, it's crazy. So we see patterns, and the only way we can see a pattern is if we're actually engaged, right? So if we're not engaged in the market, we're not engaged in taking trades, we're not engaged in practicing, then we're going to assume that our intuition is supposed to guide us through this process. And that's where we fail. Go ahead, Sire. Last words.
To say, don't copy what the 99% of people are doing, and invest in your education.
Mm-hmm.
Right on.
Wise words.
Well, thank you, man. I appreciate it. I didn't know. And I just said, hey, would you guys like to just finish this and give back to the community? I thank all of you. I appreciate all of the kind words. I'm here for you 24/7, right? And this is a trading family that we can continue to grow with each other, learn from each other, right? Figure out what's going on. I can say for a fact that the people, including Martin, that when you're going to a naked chart, right? Mm-hmm. And then all of a sudden you send me shit and you put stuff on there as if you're doing the shit right? But going to a naked chart and still taking trades, that shows that you're continuing to expand and living outside of that comfort zone. Right? Yeah, you believe. And then you go to check yourself and everything lines up. That's powerful. That is powerful. Really, really powerful. So congratulations, man. And keep at it. And thank you for the referrals. We're not huge over here. I'm not going to claim that I'm training thousands and thousands of traders, because I couldn't trade thousands and thousands of traders, right? The amount of time I spend each individual, it would be impossible.
You've got honest people that are genuinely wanting to learn something. And nobody, I know you get often get the silly emails from people or comments on YouTube. You're so focused on helping us that you just piss off. You know, I sat one the other day while asking questions. Well, why didn't you get payouts on your old accounts? All that, like, just.
I did. Yeah,
I know, but he's because it's you get payouts, and then they go, and then you get another one and get more payouts. Yeah, but no, it's great. It's been great. It's been a great course. Learning, you know, it teaches you a lot about yourself. Teaches you a lot about who you are as a person. And you get better, and that's the beauty of it, because it's objective. Every day you see something more. Every day your eyes, I think you come with this analogy before, you are literally a sniper rifle waiting for that little head to pop up, and when it does, take your shot. And that's powerful, because most people, or in fact everybody, is just guessing. So yeah, good stuff.
Well, thank you, and you guys have a great day, and thanks again. And it's going to probably air tomorrow, because by the time this 7 to 8 hour video, well, it's not going to be a whole lot of editing, but it's going to have to upload into Zoom and everything else. And holy crap. So who knows how long it might take. 2 days for it to upload before I could even cut out the first portion of it, of our group session. But take care, guys. Peace. And wish you well.
Later.
Thanks again.
All right,
thanks again.
Have a
Take
good
care.
One. Cheers.
Take care. Bye-bye.